Well, hello everybody. It is February 14th. This is the weekly review. We take a look at what happened, what we think is going to happen, and try to strategize on what we should be doing. Last week the markets ended up with a negative return again across all of the indexes, very negative on the year, but a big rally on Friday, kind of lessened the pain, I guess we should say. But year to date, bad situation, and we're 6 weeks into the year so far. What I want to do here is highlight the biggest takeaways from last week, and actually it had to do with failures on test. And a lot of times those test failures, will give you some pretty good indications of what's coming. So let's look at these one at a time here, and I'll show you what I'm seeing. The first has to do with the test failure here on the S&P 500. This was probably the biggest event that we could see. If you look at the numbers here, you get underneath this August low, or actually it's a January low in this case, and you can't hold it, right? You have less volume, right? That's the definition of a test failure. And what does it do? It leads to an immediate bounce back on the other side. If you look at the weekly, right, weekly has the same setup. In other words, you get underneath the January lows, you get back over it. So again, a test failure, kind of a hammer reversal. Even though you didn't get back above the swing point low, in other words, you got to change a trend, or actually in this case it's a reaffirmation of the trend. There was the holding, right, of that test low, and so it failed to get lower. And if you look at it here, you've also got the test now finally again of the October low. The number there is 1820. You trade down underneath at 1810, and we're only halfway through. So if we do the volume projections, you get about almost 1 billion. You're doing 946. So far the volume tells are not good, but so far it is also held on this time frame. The next set of test failures that I was looking at most closely was on the NASDAQ. Now the NASDAQ got underneath, broke trend, and we'll talk about this in a little bit, but it tested the lows from the 8th. Those numbers was 4212. You got into 4209, so on Thursday you got lower. You actually had more volume, but it did flip around and held, more importantly here on the weekly, test failure at the lows, right? And if you look at it on the monthly, it's also a test failure so far on the monthly. So again, test failures at the lows can lead to short-term trend changes, and we'll have to see if that happens. But so far, that is the biggest tell from the week. If we look at the Russell, on the weekly time frame, you have the same thing, right? You get underneath, back over, a little less volume. And if you look at it on a monthly, you're also testing this swing point low. So in all these cases, we've got test failures at the lows on the indexes. We also ended up with test failures on oil. So in other words, oil got underneath the prior swing point low, gets underneath it, gets back over it. And I looked at the WTI contract, and it actually had lower volume. So you had test failures at the lows there as well. On the opposite side of this, you actually had test failures at the highs, and that is on the weekly 7-year notes. So you get over the high, you can't hold price, right? Less volume, or actually it was more volume, but so it's kind of a partial test failure, I should say, because you really want price and volume. But you got over it, you still couldn't hold it, right? You have an extended move. This is probably done. And we may see the same sort of action take place this week on the other shorter term and longer term notes. So test failures at the highs, at least on price. The bond yields on the 20-year notes, test failures here at the lows. Now here you don't get volumes, but they were test failures. They got underneath, back over, hammer reversal. That looks like the low yields are probably done for now. And finally, if we look at junk bonds on a weekly basis, here you get under, but you can't hold under. Again, I don't give as much weight to this, but it is a hammer reversal, lighter volume. You get under this low, you can't stay under it. You hammer reversal back the other way. And if you look over at the So this is the J and K on the weekly. If we look at the HYG, it's the same story there. All right, you get under, back over, kind of a hammer reversal. So when I look at all of those charts, what are they telling me? Essentially, they're saying, hey, there is still the downside risk. That hasn't gone away, but there's a lot of congruent evidence pointing to potential short-term bottom, which we saw the spike off that low on Thursday. Now, if you look on the other side of it, there's plenty of things that say, hey, it may not. For example, if we look at the DAX, here we had that breakdown on multiple time frames. It was on this bar on the daily. Here it is on the weekly. You can see how that's extending. Usually these things extend 2 to 3 bars. So in other words, the DAX is probably going to continue to be under pressure. China, right? They're probably going to play catch up tonight when they open up. And then the last thing was, Yellen didn't do a lot to quell the market negativity. In other words, the markets didn't respond positively to what she said, even though she was a little bit more dovish. On the positive side, one last thing that that we should look at or consider on a more fundamental basis is that these, so much of what's happened over the last year and a half has been correctly or incorrectly, it's been tied to large cap companies being able to do financial engineering. And if you look at some of the data that's coming out now, and it's a tip of the hat to old Charles Kirk here for pointing this out in his notes, we've had the strongest start to the year ever in terms of buybacks. Now, if that translates to reduction in share counts, that's going to be higher earnings per share, and that's going to help the market. So this is, from a fundamental standpoint, a positive also. But even with these positives, I don't want to get too carried away with them because there's still a lot of danger out here. I mean, we could still get another 10% drop in a heartbeat. I don't think it would take much for that to happen. This market has to create some separation. Now that we tested those lows, it has to create separation. So in other words, you got this test, you got to separate. You got to go back the other way. If it doesn't, it's going to continue to be plagued with selling. I think the currencies are going to play a big part of this, more so in Europe and Asia, in the yen and in the euro. So if we look at the currency picture, and I've got the euro up to start with. Remember, we had the Draghi bar here. We had the wider range, right, that was over that. We have the expansion now of that range, which could actually carry higher. Had a little high volume, bar that is kind of hanging up there at the top. We could certainly go back up and test it. This is a big part of what's going to happen next. If we expand it out here, look at it on a weekly basis, this breakdown bar's top was a 111.39. You got to a 111.27, so it didn't actually test it. You can also draw in some other things like ABCD structures, and you can see that here, right? Those structures look like they're about done. So my take here is that what we're probably seeing happen is we're probably going to see some sort of a pullback to do a retest regen off the prior swing point high, right? And then that would lead to the next move, potentially to the upside if it's going to come. That's on the euro. So the euro is set up to try to pull back. Now, if it does, that should help the DAX. So maybe that big thrust bar down on the DAX, and now we get some sort of a sideways bar instead of a continuation bar. If we look at the yen in Japan, right? The yen had this huge run. And here on the yen, you can see that big move. Now, if you remember back, they went to negative interest rates. And then since then, you've had this huge spike up, a little bit of a pullback Friday. If we move over to the weekly, you can see a big spike up outside this range. And so if we're doing range extensions over here, right, you can see that this range extension really is about 3 of them. You've got this one, the one below it, and then this one up top. And so that one actually looks like it's completed. If true, right, then we can get some sort of a range built out up here. Again, the yen is up above where it's been, yet if it, what moves the market, I guess is my point, is not once it gets into this range, the movement inside the range. It's the shock of the move. And that's what hit the Japanese market. Here's the shock of the move here. The swing point high, it's a test. This is on a monthly now, 85.97. You get up over it, you close up underneath it. So far this month, you are going to probably have more volume. Again, range build out, potentially a rounding move back up to get back to these swing point lows before it's over. So for now, it's part and parcel of what we've seen elsewhere, and that is more congruent evidence that we potentially have some sort of a short-term bottom. So given all of that, right, if we look at the potential scenarios, last week we were thinking the big thing was the NASDAQ, right? Was the NASDAQ going to test those lows and hold them? And it did. We actually had the S&P holding the daily lows, even though it broke on the, or it actually reaffirmed on the weekly. So if we turn our attention to the coming week and what the possible scenarios are, I think the retest regenerate zones, the structures, those are the ones to watch on all cases, right? Best, worst, and the likely case. All of them are going to be centered around that. Best case is you get over it. Worst case is you just start regenerating lower. In the likely cases, we're probably going to go up there, try to test a full retest regen, and then probably head lower. So let's use the NASDAQ for example. See what that looks like. And if we do that using the NASDAQ, right, this is the swing point low here that was broken. That was on this break. And then we got the bounce back up on Friday. So you take the top and the bottom of the swing point low. That's a full retest regen if it's able to get all the way to the top. Because we come back within 6 bars, odds are we're going to get up close to that top and try to test it. And so the best case this week is for that which should happen to actually happen, and that is for price to push back up into that 4,500 level on the NASDAQ on the daily chart. Now, if we look at it on the weekly chart, you're going to see there that a push up into 4,500 really gets you close to the bearish retest regen here on the NASDAQ weekly. And so if I'm drawing that one out, right, we had 45.09, I think it was there on the daily. You can see here you start getting that overlap. To me, that's probably the best case, is just to get back up into that level. If we go back to the daily chart on the NASDAQ, the absolute worst case scenario would be for this thing simply to get nowhere. In other words, you can't even get over, say, this bar, and you just start heading back down, right? That would be the worst case scenario. And you start breaking as a result of that. You would start breaking out these lows from January on the composite. And the NDX looks pretty much the same. The S&P a little bit different. Russell also about the same. So to me, that's kind of the worst case scenario. What's the likely scenario? Well, the likely scenario is that we work up to that and then start regenerating lower. So if I come back to the daily chart, in other words, the ideal is here, what's the most likely case? The most likely case is you start getting back up into that area, and then you just simply start to regenerate lower or go sideways at best. So I don't think we'll get, the best case is you get over it and you break them. Worst case is you just head straight down. Best case, or the likely case, is that you actually do this regeneration attempt, right? And then you find out whether or not that can be broken or not, and more than likely it's not going to be, not this week. So that's kind of the way that lines up. As far as what else do we have out here, if I get to the long-term themes, some of this stuff is starting to happen. The gold, the GDX, those guys have broken over swing point highs and frankly are starting to look pretty bullish. I mean, this is a big run already. You've already had, 12, 13, 14%. The gold stocks, you've seen 25, 30% moves. If you pull this back, look at it on a weekly, it's a break over this swing point high, a break over that swing point high. So you got multiple swing point highs being broken. And if you look at it on the monthly, this is the first time in about 4 years or 3 years. Actually, it's about 4 years, right? 1, 2, 3, 4. Yeah, it's all the way back to the highs back in 2011. You've had lower lows all the way along, and you haven't broken a swing point high along the way. You're coming up now to actually test into it. But the more important thing is, the warning system, the early warning system is always the bearish retest regenerate or the bullish retest regenerate. Well, right now, this is over it. Now, we're on a monthly basis, so the month's not done. But if this holds over it, this will be the first time that's happened since this one did it. And, of course, it regenerated lower on the very next bar. And so this will be the first time, and this is the second attempt, basically, to get that kind of a move. So even though it's not definitive that a bottom's in, it looks like a bottom is starting to be in. And I wouldn't be trying to short these things now as much as trying to go long on some sort of a retrace. And if you look at the GDX itself, you've got some real power moves taking place here. You can see it again, swing point highs taken out on the weekly time frame. And if we move to the monthly, you have the same sort of thing where it's doing a bearish retest regen off that swing point low. And these are going to be key areas to watch as this thing comes up. And so I suspect it is going to probably continue. So some of those long-term thoughts are actually happening. The yelling, getting more dovish is another piece of it. We haven't seen the QE expansion, although in Japan we did see the NERP policy. We got Draghi talking this week, so we may see something on this side of the equation. And I still think, and I actually have an article I finally just about polished that I'll be printing, I think we're going to see something much more like the 70s, where we have this huge range develop for maybe a decade. And it's going to be about trading that range. Is going to be about how you're going to have to make that money, not some sort of just straight up thing like we saw over the last few years. On the fundamental side, you got Fed speak everywhere this week. You got the last big week of earnings. There's some economic data. Wall Street keeps looking to see, are we going to have a recession? And so far, that is what it's seeing, and it doesn't like it. Portfolio-wise, right, did nothing. If you have the opportunity and the time, you really should try to check in kind of the last hour on the TNT, actually on the LA's room. There, I do swing trade kind of ideas. The overnight portfolio, sometimes you just can't make a positional trade overnight because the overnight is where the trade takes place. And for example, in Thursdays on the LA's room, I posted in there that the Qs, they looked as if they were giving us a buy signal as they were closing that day, and it was potentially a buy signal. I took a position. I know some others did too that watched this. If you have the opportunity, sometimes we just simply can't make those purchases in this out of hours portfolio because in this particular environment, they set up too quick and they go away too quick. And so if you have the opportunity, there is an opportunity for you to trade along with me, even though we don't have it in the quote-unquote working man's portfolio. No trades last week, no purchases, no closures. The reversal in gold shares, the bottom looks like it maybe be brewing in the oil stocks, and shorting any larger term rallies look to me like the best trading opportunities that are going to set up in the coming days and weeks. All right, folks, that's where I'm going to leave it today. It's tough year so far. There's going to be plenty more opportunities to do things. We've been preserving capital. We're going to have an opportunity to put some of that to work here pretty soon in the portfolio. And again, if you have the opportunity and the time, check into this, right? LA's room. Those comments are there. You can see them, and you can take advantage of some trades, even though we can't do them in here sometimes. They are opportunities, and I do point them out when they show up in their higher probabilities. Have a great one. Take care. I'll see you next time.